So in the second quarter of 2022, the top 20% of the wealthiest Canadian families held over 67.1% of all Canadian net worth. Like, that's crazy, but that's not even the most craziest statistic. In the same report, in the second quarter of 2022 in Canada, the bottom 40% of Canadian households held, wait for it, just 2.8% of all Canadian net worth. That to me is crazy. So like, how did we get here? How did we get to a place where literally 20% of the wealthiest family control over 67% of all Canadian assets, but yet the bottom 40% only control 2.8% of all Canadian assets? There's a lot of blame to go around, from like the fact that we don't have a really good educational system that teaches people financial literacy, to how our financial system is set up from a top-down approach, to like the individuals themselves in terms of the work ethic and whatever else you want to put it at. But I really want to put the aim here at the Bank of Canada, because I think when you have a problem but you continue to do the exact same thing hoping for a different result, that's kind of what the Bank of Canada is doing here. Their monetary policy is making this problem worse because of the way of how it plays out in the economic system. So let me just go back as to why I think the Bank of Canada and its monetary policy contributes to this greater wealth of inequality we're seeing happening in Canada. So my first financial recession was in 2008 when we had the subprime crisis. And during that time, I kind of learned something interesting that happened, which was basically number one, if you build a company that's big enough and gets large enough, it gets its tentacles in basically every asset of the economy. So even if you make poor management decisions, the society has no choice but to bail you out, because the consequences for not bailing you out are far greater than the consequences of bailing you out. And that's really what happened in 2008, right? Like, we had all these companies that just for some reason did not anticipate that they would maybe go through a financial crisis, and they basically caught themselves, going through a financial crisis where they literally could not keep themselves afloat. But the society came to their rescue because they were so large, they had so many tentacles in the economy that if we let them fail, basically we put a lot of people out of jobs, and that would create far more problem for society than bailing them out. So that's what we did. But the second thing I also noticed in 2008 was that when things went down, assets kept going up, and the people who actually benefited were people who held onto the asset. Because the way the monetary policy worked is the Bank of Canada will come in this case, reduce interest rate to try to stimulate the economy, and that reduction in interest rate actually creates this buying frenzy, which drives asset prices up. So if you own assets in 2008 and you were able to hold on to them, you actually saw yourself go up. It's the same thing if you're in the stock market and you kept buying during the low period, you actually saw that your portfolio over time would go back up. Now, it's really important to note that, right? Because you have to have the assets to begin with. So basically what you have is a system in which when the economy crashes, the monetary policies come in, the Bank of Canada, they come and reduce interest rates. People who have assets see their asset actually go up in value over time because people start wanting to buy more stuff because it's so cheap, right? And you saw this being repeated again during COVID, right? When COVID happened, the same thing happened. The Bank of Canada reduced the interest rate, right? And this interest rate created a buying frenzy for real estate. Again, this wasn't supposed to happen because textbook economics says that, hey, if the economy goes down, right, and no one can go to work, there's no reason for asset prices to be increasing, right? People should be more scared and they shouldn't want to buy things, even if you make things really cheap. But that's not what happened, right? What actually happened is that real estate prices actually went up in Canada during COVID period, right? So according to CREA, which is the Canadian Real Estate Association, their data showed that over a 12-month period ending in August 2020, that Canadian home prices actually increased by 17%. And in Ontario, it was actually a little bit higher at 23%. And surprisingly, BC came in actually lower this time at just 11%. So as you can see, we had a downturn in the economy when in COVID crisis, right? Things shouldn't be going up, but because of the way the Bank of Canada monetary policy works is you make things really cheap, people then start bidding things up, and those who have assets actually see their asset prices go up. So now if we go back to that earlier statistics about the 20% of the wealthiest Canadian families, they have assets, right? They have financial assets, real estate assets. So they see their asset prices basically go up over time, while those people on the bottom 40%, they don't have as much asset. They actually see their assets go down because during the financial crisis, they may actually lose their job, so they can't hold on to their assets. And guess who comes in and has the ability to buy those assets? The top 20%, right? This creates greater inequality in a society because you have individuals who have assets and are actually able to weather the storm. And because they're able to weather the storm, they can buy more assets from people who can't actually weather the storm, right? Now, the Bank of Canada, in their defense, will say that, hey, our monetary policy is about stimulating the economy and making sure that things can keep going, right? And it's really helps the majority of Canadians. And that's why we go, well, okay, let's look at the data about that, right? Because keep in mind, the biggest asset that makes up most Canadians' net worth is real estate, right? In that same report, real estate made up almost 59% of most Canadians' asset, right? So it's really important that if you have a monetary policy that literally drives up asset prices, then you better make sure everyone in your society, or the majority of people in your society, have the ability to acquire that asset so they all benefit when you do this monetary policy. But that's not the case in Canada. In Canada, there are groups who can't actually acquire real estate. Therefore, their asset doesn't actually increase when the Bank of Canada is doing these policies. It doesn't benefit them as much. And here's what I mean by that. So CMHC actually conducted a study on homeownership inequality, and what they found in a study during that time, again, I just want to preface this. When I say certain things such as like white or black, I'm really not trying to be offensive to anyone. I'm just quoting what the actual report says here. So what it found out is like the homeownership rate during that time when they did the report was 72%. This is a little bit higher than what it actually is currently for Canada, but I'm just going to stick with the report itself. So 72% was the homeownership rate for Canada, right? But what it did is it actually went through all these different groups within society in Canada and actually found out what was their homeownership rate, and the numbers were really discouraging. So black homeownership rate in Canada was actually at 44%, and Arabs were 47%, Aboriginal people were 49%, Latin Americans were 50%, West Asian was at 56%, Korean was at 61%, Filipinos were at 62%, white at 76%, Chinese at 83%, South Asian at 75%, Southeast Asian at 72%, and Japanese at 70%. So as you can see, if the Bank of Canada is saying like, hey, our policy is to help all Canadians, that's not really true because not all Canadians have equal access to real estate, which again makes up the biggest asset for most Canadians' net worth. So if you have a policy in which basically you come in, asset prices go up, but not everyone in your society has the ability to acquire those assets for whatever reason, then you're really creating inequality. You're making the situation worse. And I think the Bank of Canada needs to pay more attention that its policy isn't actually helping all Canadians. What it's doing is helping certain groups of Canadians that already have assets, and this could be a mix of all those Canadians I mentioned, but those Canadians who have assets and are able to weather the storm are actually getting wealthier each time we do these monetary policies when we go through these boom and bust cycles, right? So I think it's really important that they start paying attention, understand like, hey, why is it that certain of these groups that I mentioned have a difficult time acquiring this asset, which typically is what makes up most Canadians' net worth, right? Real estate is a huge portion of that. And if you're thinking that, hey, maybe the reason that this homeownership rates are lower is because of personal reasons or whatever it is, the study actually found that that was not the case. So the figures that I quoted for you from that study actually took into consideration things like demographic, location, and income. And it still found that it was still a huge divide between those homeownership rates from the general population. In this case, we're talking about the 72% relative to what those other groups' homeownership rates was actually at. So we don't know why it is that these groups are having such a difficult time acquiring this asset. But what I do know is that if we have a policy in which basically every time the Bank of Canada reduces rates, asset prices go up, and you have a group of people within your society that can't acquire the biggest asset that actually lifts people's net worth up, which is real estate, then I think you're creating inequality. Now, I'm not saying that the Bank of Canada or the individuals that work there are intentionally trying to create inequality. I'm just saying that the system that they've come up with, they need to recognize that it's actually adding to the problem, because not everyone has equal access to acquired assets to actually ensure that their asset grows over time when these policies are being implemented. And inequality is a real problem that we need to figure out, and most countries are trying to figure this out, because that's why you have a lot of tension, because when you have 20% of the wealthiest family controlling 67% of all assets, and you have the bottom 40% controlling only 2.8%, that's a huge problem. That makes everyone feel uncomfortable, right? And like wealth, inequality compounds, right? So if you have a generation of people that can't acquire certain assets, and you have a generation of people that can acquire certain assets, they continue to see their wealth grow over time. And then those people that can't acquire the assets see their wealth actually go down over time, right? So we need to figure this out. And it's also a bigger problem for the Bank of Canada, because you need to keep in mind that homeownership rates are actually going down because, again, we're making assets really expensive. So a lot of people can't acquire this asset. So renter households actually increased by 21% compared to just over 8% for homeownership. So again, this goes to the whole problem, right? If you have a policy which unintentionally drives asset prices up, but you have a population that increasingly not a lot of people are owning these assets, then you're going to create further inequality, because people who have those assets will just see themselves continue to get richer, while people who don't have those assets will see themselves continue to get poor. And that's going to create friction between people, right? And that's where you're going to get this tension between society. So to me, the Bank of Canada needs to do a better job understanding that, hey, our society isn't equal in terms of access of these assets. They're not equal. Our policies are unintentionally helping those who don't actually need our help from a monetary standpoint. And we need to figure out how to be more targeted in when we do these policies to make sure those groups that we know typically don't have those assets are actually being helped, right? And this is what happened for the first time in COVID, where the government actually gave cash out to people. I know people were getting like a little upset about the fact that, you know, the university students that were getting $2,000 a month, but what they weren't really telling you was that their asset prices were increasing over time, and they probably got $100,000 or $200,000 that was tax-free, right? So we need to figure out to make sure that our policy is more targeted and understand that people in our societies are not having equal footing, right? And make sure that we don't make the situation worse by basically putting more flame to the problem, right? So that's it for this video, guys. I hope you guys found this video interesting and informative, and if you did, do me a huge favor, guys. Make sure you like the video, and of course, make sure you subscribe to the channel if you're not already subscribing. If you're interested in getting the merch, make sure you check out the link below in the description, and as always, I'll catch you guys in the next video. Take care.